Hello.
Hello.
Welcome.
Good afternoon, Marina.
You've been jumping on and off the stage. How are you
Perfect.
today?
I'm very good, and you?
I'm fine, thank you. It's really nice to have the entire industry together, at least for half day here before September. I'll leave the stage to you, and I'm looking forward to this very interesting interview.
Thank you very much, Marina. And I understand you are bringing Julius to the stage now. Julius, good afternoon. Good afternoon, everyone. Today, I'm very much looking forward to discuss hotel investment sentiment in the CEE and SEE region with Julius Meinl. Julius, you are from a multi-generation family business that has a great legacy on services. Amongst other responsibilities, you are CEO of Julius Meinl Living, and you have just opened a great hotel in Prague, the Julius, that is located on Senovážně náměstí. So this is a little bit for the intro and the ads. How are you, Julius?
Thank you, Frederic. Thank you so much for having me. I really very much appreciate it. Should I give a bit of a background about us to start? So,
if you want, yes, please.
Yeah. So Julius Meinl Living is part of the House of Julius Meinl group of companies, which is a family business that has been focused on Central and Eastern Europe since a little bit over 160 years now. Julius Meinl Living is an integrated owner, developer, and operator of luxury apart hotels in capital cities in the region. And as you pointed out, Frederic, we have opened our first flagship property here in Prague. I'm actually currently sitting in it, and are actively looking at acquiring and developing and operating further assets throughout the region. So we're very much a focused operator, owner, and developer in the hospitality space in Central Europe.
Thank you, Julius, for the intro. We have approximately like 20 minutes in front of us. It's going to be like a question and answer type of seminar, of webinar. But maybe as a first question, I wanted to ask you when and how did you go into the hotel investment business? Like you gave us a good understanding of what you do within your company, but yeah, maybe get a step back on when did this all happen?
Yeah. So thank you, Frederic. We as a family have historically focused on the following business verticals. One has always been branded goods, branded luxury, affordable, accessible luxury products with a service element to it. On the other end of the spectrum, real estate. We felt before the pandemic that there was a unique opportunity in time in our region available to expand into a small subsector of the hospitality industry, yet a growing sector, which answer to a long coming dynamic, or we view it as a long coming dynamic from the modern traveler. Namely there is a growing portion of the travelers who travel for a variety of reasons at the same time. They go to a place for a short period and or for a longer period. They go there with their family, yet at the same time also for work. And really for this type of segment of the market, particularly in the accessible luxury segment, so in the higher end of the segment, we felt there was an opportunity to create a product that enables exactly that. Yeah. So what that really means is what our mantra is: luxury home away from home. And we define luxury as follows: prime city center locations, large spaces. So our spaces are from 40 square meters up to 90 square meters. They have full kitchens in them. They are a luxury finished product in terms of high-end finishes, and at the same time, through the use of frankly nowadays already accessible mobile technological applications, we believe we're able to provide the customers with a high service experience, yet at a very affordable, accessible price point. This is really what we focus on. So our residences, our product has mostly is mostly composed out of apartments, small apartments between 40 and 90 square meters, where you can go there for one night, but you can also stay there for a few months. And we're actually seeing this right now with our customers. Our first customers we just opened this week, and we have a fair amount of long-term stay guests of corporates that stay for over 5 months. Yet at the same time, also families that just come here for the weekend, and also business travelers who are here for a few days and enjoy. So this is really what we wanted to focus on. And why did we like this product? We believe this is a product where what you can do is to generate meaningfully more revenue than you would have been able to generate from a, let's say, typical residential product, yet at the same time a little bit more stable thanks to the longer stay component than a traditional hotel would be, and yet at the same time benefit from a light operation, and hence a very limited headcount that we are running our properties with, and which translates into a fairly healthy margin, and thus making it an attractive investment for us.
Yeah, thanks a lot, Julius. It makes a lot of sense. I mean, apart hotel or long stay residencies is a product that is very much in the trend these days, and I think the pandemic has probably helped this. I know that you can and therefore kind of your timing was definitely great for you to kind of focus in this asset class. Maybe coming back on kind of your investment strategy, because I know that you're also currently working on investing and progressing on buying some other hotels across Europe, not only in the CEE region. Last year, you bought a hotel in Budapest that you are converting into a apart hotel as well. I just wanted to ask you, looking at the past 2 years and the pandemic years, what has the pandemic and COVID-19 changed in terms of your strategy, if anything?
Yeah, thank you so much, Frederic. I think overall, the pandemic and the experience of the pandemic has not changed our fundamental focus and strategy. We always focused on a small subsector of the wider hospitality industry that we believe before the pandemic was enjoying a very healthy growth rate and had a reason to exist. I do believe that, and on the previous panels, it was clearly said, with the pandemic having happened and a lot of historical rules and ways how to go about operating having changed, one thing that has actually definitely seems to have changed and is here to stay, it's really, in my view, an acceleration of a trend, is that people are much more mobile as to where they're going to work, where they're going to travel, and it really flows within with it. It becomes a very much a continuum. And so as a consequence, extended stay or apart hotels are, we believe, a very good space to be in. It will enjoy a further growth, a healthy growth in demand and also in supply over the future. So now I think though, that being said, whilst historically we had a sole focus on Central and Eastern Europe, what we have concluded during that period is a focus in Eastern Europe on the core cities, the cities with high amount of travelers going through them as a first target. And we have, as we're gaining our experiences with our properties in Prague and Budapest, gained quite a bit of confidence as to the operating model, and are now actively looking towards the west, where in Western capital cities where obviously the price tag is a different one, both on what you can charge, but also on what you have to pay to acquire product and develop.
And I suppose also on the operating cost as well are quite different in Western Europe than Central Europe. So therefore, your margins, operating margins, may be not looking alike in some way, right?
Well, I think this is a very good point, Frederic. I think that I'm actually quite confident about, that we will be able to maintain our margins even in other geographies, simply driven by a focus on reduction of staff. So we really try to maintain a very skeleton staff in our properties, and complement this through technology, which is a bit of an overused term, but it is we believe it is working for us and our guests, and really ensuring that this part of the cost structure is staying as lean as possible. What we are also seeing is obviously that you can charge more for a room in a Western European city than you can charge currently in a city in Eastern Europe. However, Eastern Europe's momentum is fairly good at this stage, in terms of recovery and also growth rates.
Yeah, makes a lot of sense. Maybe staying on COVID crisis and kind of the last few years, like what is the most important lesson that you took out of that period for you as a business?
Well, I think besides, as I said before, the flexibility and just the acceleration of the need and the willingness of individuals to live and work in a fluid continuum, and live and work from various places in this fluid continuum. I think also what is, in my view, becoming pretty clear, at least from my experience, is that the ingrained need and the want of individuals, corporates, to travel, to meet, to forge relationships, is ingrained in the human, into us humans. And as a result, this is, I think, why you're seeing now the markets and coming back meaningfully stronger than what I believe a few months ago people would have expected, and let alone a year ago. And we are seeing this in our properties, that we are way above what we expected to be able to achieve, both in occupancy as well as in daily rates. And our customers are traveling for a variety of reasons, and so it just shows that this is the key learning for me, is human nature really doesn't change so much. Yeah, it's we want to travel, we're social beings, and we need to forge relationships in person.
Yeah, that's very encouraging to see that, kind of like over the last 2 years, like you basically, it helped you reinforcing your strategy and continuing investing into the hospitality industry. Now it seems that COVID is behind us, and the day of COVID ended in Europe was the day that the war started in Ukraine, unfortunately. As the war had an impact on your investment strategy at this stage, what's kind of the main take from you on this point?
Well, thank you, Frederic. I think overall, the focus of the family overall, and the focus of Julius Meinl Living on investing in real assets, in apart hotel, extended stay properties throughout Europe, is as strong as it was previously. We are seeing very strong fundamentals, very strong momentum on the fundamentals. We are seeing currently a very encouraging top line growth rate, and are not experiencing any meaningful erosion of profitability. So this makes, in an inflationary, uncertain world, our focus on the industry remains very, and our commitment remains very, very strong.
That's clear. I think the fundamentals of the region are still very, very strong, and I think we see it in the performances achieved in the hotels overall. I think the recovery on COVID is still here and not being derailed. And it's again encouraging that you still strongly believe in the region.
I mean, frankly, you, in my view, please forgive me for interrupting. I think you can acquire at very attractive base prices properties in the region, and with operating performances showing themselves in the way they show in the way they're trending right now, this becomes a very compelling proposition. Yeah, particularly in the context of rising inflationary pressures and also rising rates.
Okay, very good. As I said at the beginning, you have opened your first hotel in Prague, the Julius, and you have sold also an important hotel in Prague. This was, I think, last year or 18 months ago, the W Hotel, which was a hotel under construction. You had a great flair in terms of like timing, considering the spike in construction cost, and we've seen like a significant inflation on the cost, right? But going forward and taking under consideration that you typically like to buy existing hotels and spend quite a bit of money in renovating and turning the product, like how do you address capex and repositioning opportunities going forward?
Yeah, I mean, it is a very good question, and it is we've started seeing construction costs in our project, or construction cost estimates in our project going up about the same time last year already. We at the time it became difficult to justify a fair amount of the projects because we didn't have any data on top line, and where will the result be going forward. Now we have not seen construction costs increase any further than what we've experienced before. We are seeing about 25 to 30% increases in certain overall budget estimates. However, rates are now meaningfully above what we had even hoped to achieve. So this makes actually puts us into a position, at least theoretically, where we do where a fair amount of projects start becoming more feasible that hadn't been feasible before. I think this is one part of it. I think the other part is that we are looking more and more also at acquiring existing apart hotels where there's only a more limited amount of reconversion that is required. So as we learn more about what has been necessary to spend in what elements to ensure that our customer experience remains on the luxurious level like we want to achieve it, we are also learning how to optimize these investments. And so one part of it is also to acquire assets that are closer to that don't require a full reconstruction.
Okay, perfect. I've been asked to kind of like ask my last question. So unfortunately, just wanted to touch maybe on hotel financing. What's your experience with financing hotel project or hotel assets, and are banks reopening their door to support these investments?
Thank you, Frederic. I mean, perhaps if you take a step back during the COVID time, our first financing, large construction financing for our asset here in Prague, we signed and closed actually in the middle of the pandemic. So we signed this in May of 2020. So right when everything was going on. So what I want to say with this is, even during the pandemic, our experience had been and has been that there is some demand out there, particularly from local and regional local lenders, who are willing to finance. Financing was obviously slightly more expensive than it was. You would have had it before the pandemic, but it was not at meaningfully more either. So I think the market overall, whilst it had been meaningfully reduced in terms of lenders that were willing to lend, there were always there was always some lenders available and willing to step in, local lenders. I think what we are starting to hear are more the regional and also out of region lenders who to date have been showing reluctance. They're starting to show more interest and to have conversations and make offers on both construction financing as well as financings and refinancings of existing assets. So I do think that as the momentum continues, it really opens up. That is that when I'm referring to other lending markets, the private lending markets, both on the financial institutions as well as fund lending markets. The public lending markets, I think, they seem to be currently fairly closed. If you were to refer to bond markets, real estate bond markets, and such things.
Yeah. So thanks a lot, Julius. That's I as a summary, I would like to say like it was very the intake I consider from our discussion is that you're still very positive on the market on all sides, being from the investment side, the financing side, the operating side. I wish you good luck with kind of the first weeks and months and years following the opening of your hotel in Prague, and many more to come going forward with a great brand that is well adapted to the current market. Thank you very much, Julius, for your time.
Thank you, Frederic. Goodbye.
Thank you.
And Frederic, thank you for this interesting interview. It's really nice to hear an investor who is positive about the market. I'm sure there's many more. Exactly. Well, it was nice to have you here with us today, and I'm looking forward to seeing you in a couple of months in Athens.
Me too. Speak soon.
Thank you,
Take
Fred.
care. Bye-bye.
Thank you.